want to thank all of y'all for turning out here today. The reason why we started to do this was because we were getting slammed by a lot of requests of folks wanting to know about this, and they just don't know how to get, they don't know who the SBA is, and they don't know how to go to their bank, or they don't have resources, but they know that scores of resources out there. So the questions start coming to us. So, but since all this is new, we're very, very fortunate in that we've got Patrick that's been with us for, gosh, 8 or 9 years now and does us a super job. So he agreed to come on today. So Patrick, really want to thank you for coming on and sharing. And the way I have this envisioned is this is kind of like our first step. I think Patrick can probably carry us through all the basic programs and give us an overview or some basic information. And probably near the end, we can talk about some ways of getting this information or links out to you guys and gals. So, so we left a few minutes at the end for questions and answers, and actually to talk about a case study or two. I think a few of you already had some success stories. So, Patrick, if you want to, buddy, go ahead and take it away and just ride with it, and we'll take notes. And if you have a question, raise your hand. Or Patrick, you want everybody? We can say the questions to the end, whichever you prefer, buddy.
You can ask him as they go along.
Okay. All right.
No problem.
If you want to ask me as you're going along, just raise your hand, and either Patrick or Mark will see you, and then you'll just unmute yourself so you can ask your question.
All right.
Okay.
You have the floor, Patrick. Great to see you.
Good to see you too. All right. So I don't have anything after, like, I'm good for the next hour at least. And if you need to go over, I'll be here. But I think an hour will be plenty of time. So I'll just say thanks for joining in this morning and this afternoon. And there's a bunch of things coming out the next couple of days that I'm sure your clients are going to be interested in. Probably the Paycheck Protection Program and the small business debt relief piece of the puzzle. And the ones that are on top, the economic injury disaster loan has been available for the last, I think, 3 to 4 weeks now. In North Carolina, I think it was at least 2 weeks. North Carolina was declared a disaster area related to the coronavirus. So small businesses have already been applying through the economic injury disaster loan portal. And also this week, starting on Monday, seems like ages ago, the economic injury grants were rolled into the economic injury disaster loan application. So I know it might sound like a bunch of gibberish just right now, but as we go through the slides, I think it'll all make better sense. So right now, SBA has the economic injury disaster loan program up and rolling, right? That was something that's been out there for years, for hurricanes, earthquakes, forest fires, and that was $50 billion that was allocated to the SBA through last appropriation cycle, and it was ready to roll out immediately when this COVID-19 disaster was declared. And so if you're a small business, if you're a nonprofit, most likely you're eligible to apply for the economic injury disaster loan. I'll talk a little bit more about what that means. Small agricultural cooperatives are also eligible. Small aquacultural businesses are eligible, and most private nonprofit organizations are eligible. So think church daycares, associations, business associations, chambers of commerce, all those would be eligible. So when you go through the application, it's a very streamlined application. There's really not much to say. There's no place you can put in your credit score or anything like that. The SBA is being very lenient on the credit review side of the application. So there's no minimum credit score. They're just looking at your pre-crisis cash flow, let's say 2018, 2019, and what schedule of liabilities you currently have. Let's say your payroll, accounts payable, fixed debts, and other bills that you have to pay, but maybe you can't because of the crisis and the economic downturn. They were looking at all those kind of elements, pre-crisis cash flow and your schedule of liabilities. And that's going to go into an equation, and the SBA is going to offer you an amount. So it's not like a typical bank loan where you go to the bank and say, I need $100,000, and they're going to say, we need 100,000 in collateral or something to that effect. We're really not interested in collateral. We're really interested in what their cash flow was before all of this happened. And for loans under 25,000, those are collateral free. And for loans over 25,000, SBA will seek collateral that is available. So if you go into the application and then you say you have business assets and you list some business assets, or you list personal assets, when it comes to the underwriting and the closing, you'll get a call from the closing agent and they'll say, yes, we need this, pledge this collateral. No, we don't need it, pledges collateral. And they'll go from there. But let's say you're a services company, you don't have any collateral. You rent server space, you develop software, there's just no collateral there. That's not going to keep you from applying and getting accepted and approved through the economic injury disaster loan. It's not required. But if it's there, they'll be inquiring about it and maybe asking you to pledge that for your business loan, your economic injury disaster loan. So how much can a business borrow? They can borrow up to $2 million, and that is per business. So serial entrepreneur has a restaurant, has a hair salon, has another business. They could apply for all individual businesses up to $2 million as long as they're under separate LLCs. So that's kind of the rule there. Later on, I'm going to talk about the payroll protection program, and that's going to be a little bit different. So just kind of keep that in mind. Let's say you're a franchise and you have multiple locations, or a restaurant with multiple locations. Under the payroll protection program, you'll be eligible per location, even if it's all under one LLC. So it's a little bit different in the payroll protection program. But under the economic injury, it's per LLC. So the term is up to 30 years. We want to make that debt coverage, that debt payment as minimal as possible during recovery. So for-profit interest rate is 3.75, nonprofit interest rate is 2.75, and the SBA is going to work with them on a term. So they'll say, we think with the amount that you borrowed, you can repay it back in 15 years. Depends on the amount, or 20, 25, but the max they can go is 30. And so they want to keep that debt load as minimal as possible, but they have to take in at least a $50 loan payment per month for any disaster loan. So depends on how much you take out. It may just be like a 15-year loan with a minimum payment of $50 per month. We're going to look at the type of business, the size, and the financial resources. But the application itself, as you'll see, it's very streamlined. And you can use, like I said, you can use these for payroll, fixed debts, accounts payable, and other bills that it could have been paid had the disaster not occurred. It's not intended to replace lost revenue. That's a big, big piece of the puzzle, or profits. So let's say I had a big Mother's Day event scheduled. It was going to bring in 50,000. No, the disaster loan is not going to make up for that lost revenue. But if you had previous revenue in 18 or 19, and you had bills that were coming due based on that, that event, then that would enter into the equation on how much the SBA is going to offer you, but it's not directly going to replace those lost profits. You can't refinance using an SBA disaster loan, so you can't take it and pay off a different debt, and you can't use it to then maybe open up a different type of store or kind of transition your business model. That's not meant for that. It's meant for continuity of operations and help keep your doors open. All right, so this is segueing over into the grants piece of the puzzle. So as of Monday, if you go to the online application for the economic injury disaster loan, the first part of the application is going to ask you, do you want an economic injury grant? And if you need that or want that, you can say yes, and type in your information, your EIN, your social security number, depending on if you're a corporation or LLC or if you're a sole proprietor, and you're going to hit yes. And that's going to go directly to the loan processing center, and that will get distributed in a matter of days. It doesn't matter. It's a grant. It's going directly to the borrower, or in this case, to the grantee. And it doesn't matter if your application is eventually denied or approved for the economic injury disaster loan. So they're getting this money no matter what. It's going out the door, and you got to put your social security number or EIN attached to it. So the question is, can anybody go in there? You know, my brother, my sister, my uncle washes, you know, houses, power washes, she babysits, whatever it is. If they want to go in there, and if they have a legitimate, you know, business, they're going to have to basically state they're a small business under X amount of employees, and they're not doing any of these bad things like illegal activities or loan sharking, or we're not going to relend it. You click all those buttons saying you're not going to do that, and yes, you are a legitimate business, you can apply for a $10,000 grant. You have to supply your social security number or your EIN. So it's not going to just be, you know, take the money and run. They're going to have a record of who this person is and who took that grant. And then as they move through the application, they'll fill out the rest of the economic injury disaster loan. It's taking about 8 to 21 days to process an economic injury disaster loan, and about another couple of days for electronic disbursement. So it's all going out in the form of direct deposits. So here's the catch. So we've been getting a lot of calls from small businesses saying they applied early, like last week, last Monday, maybe even a week or two ago when it first rolled out. And they're calling the processing center asking where their application is, and they're getting told to reapply. And that's frustrating a lot of people because there was a batch of applications. We're told, I'm not sure how accurate this is, but we're told that the batch of applications with the first 4 digits, 2000, that those applications were lost because they were initially rolled out the disaster loan portal. It was kind of it wasn't meant for the whole country to apply to. It was meant for like North Carolina, a section of the country that got hit by a hurricane to apply to. So it crashed. They redid it. That was still not the best way to do it. So they redid it a 3rd time. And that's the version that they're using now that started up on Monday. So in all those transitions, some of those applications were lost. And so they're telling people to go back and apply from scratch using the new application. So you may have some questions. I'll mention this. Let's say they applied Monday with the new application, or the other, maybe before it crashed with an application, and it went through, but they didn't know about the grant yet. So what we're telling those people is go back to the online application, apply for the $10,000 economic injury grant, and submit that. It's not going to interfere with your loan application. So you can go back to the same portal, apply for the grant by itself, and both of those will be processed. They won't cancel each other out, even if they're by the same company or by the same sole proprietor.
Good. You want to pause a minute to get some questions?
Yes, sir.
I have muted people, so unmute when you speak. Go ahead. Paul?
Hey, Patrick, this is Dan.
Dan, go. All right.
I'm a little bit. Can people apply directly to the SBA through the application, or they have to go through a bank?
Yeah. So for the economic injury disaster loan, I put it up on screen. It's going to be directly from an SBA government portal. We're directly lending these disaster loan funds appropriated from Congress, and they go directly from the U.S. Treasury through the SBA to the borrower, to the small business.
Okay, that's for the economic injury disaster loan, the loan and the grant.
Right. Correct. Both.
Okay. Okay. Direct to that SBA portal. Okay. Thank you.
If you reference this, I apologize, but are these requiring personal guarantees?
So the economic injury disaster loan does require a personal guarantee.
And how is the underwriting criterion, or how are the underwriters addressing businesses that have been open for 6 to 12 months? Do you need a certain number of years of earnings?
So our guidance is for folks that are under a year, we're telling them apply. Let the SBA loan officer decline you. Don't think that you aren't eligible if you're under a year. I think the case could be made that if you had any kind of revenue in 2019, and if it compared to, because the disaster declaration started January 31st, 2020, and goes to December 18th. So if you had any kind of economic injury starting January 31st, and you could somehow, you could get some type of assistance. So we're saying apply, let the SBA kind of sort them out.
And final question, you mentioned that there was a batch that might need to be resubmitted, and you referenced Monday. Would that be Monday of this week or prior week?
Yeah, so Monday when this third iteration launched, that was the clean one.
Okay.
So somewhere between when it launched 2.5 weeks ago and Friday, or Sunday, I should say, there was a batch lost. And it was, towards the earlier period when it first went up.
Thank
I
you.
have two questions. I got one that was emailed in, and it's ask Patrick if banks ready to handle PPP, because he found an article that said they aren't yet. That
was Mark, right? Mark from.
Yeah.
I emailed him back. I said that was above my pay grade. But yeah, so if they are a 7A lender, they've been so let's say 2.5 weeks ago, the administration was working with the American Bankers Association, with the Credit Union Association, to give them a heads up and saying, are you guys ready for this? Are you able to handle the bandwidth here that's going to be coming at you? And so they've been talking with these organizations, and through the organizations, they've been filtering it to the banks. So they've been gearing up. But I would say that I would recommend, and if you talk to your clients, I would say go to a SBA lender that's already been doing SBA loans, because a lot of banks are jumping in. Like we've had numerous banks approach the SBA and approach us about, hey, we want to get into 7A lending now. And those banks are going to have a real steep learning curve. But the banks that are already doing SBA lending, they should handle this fairly easily because there's basically no underwriting in the payroll protection program. So Dan's previous question, like economic injury loans and grants come through the SBA. Payroll protection program loans come through SBA banks.
Patrick?
Go ahead.
I'm sorry. Thanks, Martin. Patrick, Bob Jones here. I actually did apply on the website on Monday for my business and received a receipt for my application saying it's been submitted. It starts with 3,300. But when I was actually making that application, I was making the application thinking it was the PPP program. So I'm not sure what I should do at this point.
That's fine. That's fine. We're also recommending that small businesses apply for both.
Okay.
And because my logic is, and I think the logic that the administration has is that it's going to take 8 to 21 days to get the loan approved. There's no obligation to take the money or the loan when offered. And in the next 8 days or so, as the payroll protection program rolls out, we should be getting like very specific rules by the end of today, or at least by midnight, because the payroll protection program kicks off April 3rd. So banks are eligible to lend starting tomorrow. They're going to have kind of more specific guidance on some of the rules, like what payroll expenses are going to be forgiven. Does that include withholdings and things like that for employees? You know, because they're trying to figure out what exactly counts as payroll costs.
Mm-hmm.
So those rules will come out in the next 24 hours. And as you get those rules for the payroll protection program, you'll be able to compare apples to apples. If I take an SBA disaster loan, what are my repayment, costs going to be? If I take the payroll protection program, what are my repayment costs going to be? You can take both. There's no, in the application for the payroll protection program, it doesn't say you can't take one if you have an EIDL loan. So it does say you can't take 2 payroll protection program loans out, though. It says you can only take 1. And I'm assuming that if you take the grant at $10,000, that's going to be taken out of some kind of forbearance that you get for the payroll protection program. I'm assuming that will probably be the case.
All right. Will I also have, just quick follow-up, will I also have to be able to apply for the payroll protection on the website as I did the EIDL?
Yeah, so no, because it's going to be going through banks. And I will send Dan the sample application that's been out there. It went out like a day or 2 ago. So there's a sample application. It's an SBA form so-and-so. And there's a white kind of like a fact sheet on it for borrowers and the overview sheet for borrowers. I'll send that to Dan to send out to everybody. But that application, you walk down to maybe the bank that you're doing business with right now, if they're doing SBA lending, or to a bank you're comfortable with that does SBA lending.
Okay.
I have 2 quick questions, then I think Herman's in the mix. Herman, you okay? Hang in there. And so 2 quick questions. One, I heard something on the news. I got the tail end of April 1st. If employers with a certain number have employees and they get the virus, they're required to guarantee employment. And that's all I'm going to say, because I didn't have time to to research it. That's the number one. The number two is, what's the answer for sole proprietors where the whole business works on contractors in their business? So those are two quick questions. Well, they're probably not quick questions or two. And then I think Herman's next in the mix. Go ahead.
Right. So, so I'm not sure if the first question is regarding like employment law. It sounds like there's some employment rules coming out of the state of North Carolina. I'll forward you a really good, I'll forward Dan a really good newsletter from the Department of Commerce. It has a bunch of links to the employment new laws that are out there. Trying to think of part two. If you're working with 1099s, those would not be, so under the payroll protection program, there would be no loan forgiveness because they're not employees.
Mm-hmm.
They would have to apply themselves. If they're 1099s, most likely they're operating under a sole proprietorship themselves, right, or an LLC themselves. So
that's what I meant. What advice do you have to sole proprietors or sole proprietor LLCs? What are the funds most probable available to them? That's what I meant.
Gotcha. Yeah, they could apply for both. They could apply for economic injury, and they could apply for the grant, and they could apply for PPP.
Okay.
Sole proprietors are eligible. Home-based businesses are eligible. Online businesses are eligible. Herman, you've been patient.
On the Leave Act, if you have under 50 people, you can opt in or opt out.
Okay.
And if you have to pay it, you get a credit on your payroll taxes to get yourself reimbursed over the next 18 months.
Okay.
On your Form 941. But the credit is only for the employer's portion of the FICA and Medicare. It's not for the total.
Sounds good. Well, at least 50 and under can opt out. That'll help a little bit.
Any other questions? And Patty just mentioned she's dropping in and out, so I told her to text any chat she has so we can make sure to include everybody.
Awesome. Well, I'll go on and just do a couple more slides and then I'll stop again. So we're talking, most small businesses are going to be eligible, hotels, motels, bread and breakfasts, restaurants, retailers, manufacturers, travel agencies, doctors, lawyers, veterinarians, chiropractors, all the professional services. This one stands out because it's different than normal. Owners of rental property would be eligible. So your tenants not able to pay, the owner of the rental properties could go through the Economic Injury Disaster Loan Program and apply. A lot of that comes from the disaster side, like when hurricanes and tornadoes strike and the tenants are not able to live in there, they're not able to access the money, so it kind of comes from that situation, but they're included. And I think that there's a business case for that. And then the last piece is what the physical presence, it's kind of like in this case, it doesn't matter because all 50 states have been declared eligible for disaster loans. But the physical presence test is basically when hurricanes strike North Carolina, and then you have business in Virginia trying to claim disaster loans when they weren't affected, and it really doesn't apply to this situation. Like I mentioned earlier to Dan and everybody, disaster loans come directly from the U.S. Treasury through the SBA. The disaster loan website will take you to the loan application. There's no cost to apply, no obligation to take the loan when it's offered. And let's say they offer you $200,000, but you need $5. You can go back to the SBA while the disaster declaration is still in effect to December 18th, 2020, and you could ask for additional funds. And that may be extended, we don't know. Normally during times of hurricanes, those deadlines are pushed back even further. And then if you have a disaster loan already, you could still apply for another one for the folks on the coast. That may be a situation for them. And if you have a maxed out SBA loan at 5 million, which is normally the cap for normal SBA loans, you could still go in and get an SBA disaster loan if you needed it. And yeah. All right, so this is what the portal looks like. So the first screen, I'm going to try to get screenshots of all the screens, but this is what I have so far. You're going to tell the SBA that you're a business with not more than 500 employees. You're going to tell them you're not engaged in any illegal activities. You have control of the company with over 50%. You're not an agricultural enterprise. And we're getting some clarification on that. So who's eligible for disaster loans? Let's say you're a farm, but you also run a store on the farm, or you do value-added products. Would you qualify? We're asking disaster for clarification on that. And just note that under the PPP program, all small businesses are eligible. So that would include farms. So under PPP, farms are eligible. Under economic injury disaster, as far as we know it, they're not eligible. And so that's some of the questions. And then you're going to go under the business information tab, you're going to list all the owners of the business entity. So if you're an LLC, S Corp, whatever, partnership, you'll list the individual owners. So let's say it's owner one's 50%, owner two's 40%, owner three's 10%. You have to list them all. It's got to equal 100. So if you have some silent partners out there that are in the 5, or below, it's rare, but it happens. They have to be listed too. And so it's got to equal 100. Then we're going to ask for some financials, and then you're going to wrap it up. So we've had a lot of questions on the, so here's screen 2. You're going to put your business name, your trade name, your EIN if you're a corporate entity or LLC, your social security number if you're sole proprietor. You'll list if you're a nonprofit or not. You'll list your gross revenues and some other kind of overall questions there. And I'm going to try to get screenshots for the rest of it. But so nonprofits are asking, how do I handle the ownership question? So we're getting some clarification on that, because as a nonprofit, right, executive director, you don't own it. So I would say just fill it out to the best of your ability, because it's going to be asking for your social security number and your date of birth as an owner. I would say just put it in and then have the SBA loan officer come back and call you and ask for the additional documents you may need as a nonprofit. All right, so under the economic injury disaster loan, nonprofits are eligible, right? Nursing homes, daycares, community centers, educational centers, churches that run those centers would be eligible under separate, 501c, 501d, 501e, IRS ruling letters. So if they're a 501c, 501d, 501e, those would be eligible for economic injury disaster loans. Or if you have something from the state saying that you're a non-revenue producing organization, you could provide that evidence and we would use that. So that's very different. So you may be getting calls from nonprofits. Tell them to apply and have the SBA work through their loan application. They can apply for the grant as well. And this is the website that's up and running right now. That's the screenshot. That's the screenshot I got from the COVID-19 relief. www.sba.gov, and they can call the service center at the 1-800 number, and just let them know that they're going to be, when they call, if it's during peak hours, they may be like 1,500 caller. That doesn't mean they're going to wait for 5 hours. We have 2 loan operation centers in the country, and we have FEMA tasked over to us with hundreds, I think over 500 employees from FEMA are now attached to the SBA in the loan processing center and the call center. So I heard about a wait hour of an hour, which is not too bad if you call in at 1,000. So I would tell them to hang on, and it should go quickly. Go make a cup of tea or something. I don't know. It's a tough business. Disaster customer service is also an email they can send at sba.gov. All right, you guys have any questions so far? No? Martin, you see anything?
I'm just checking to see if anyone, first of all, yeah, we do. Herman, go ahead. You have the floor. Unmute yourself first. Jay, takes a little habit. Herman, I just unmuted you, so you got it.
Okay. Patrick, I have a question concerning the bank. Can people apply for the disaster loan at the bank? Because you mentioned something earlier, and if they apply, do they also can get a grant?
Yeah, so the economic injury disaster loan, and sometimes we refer to it as EIDL, just by the acronym. So the economic injury disaster loan goes through the SBA loan portal, which is direct from the government. So it's coming directly from the SBA and the Treasury Department to the small business. So they don't have to go through a bank.
Okay.
But in the next program I'm talking about that just came out as of Friday, they will be going through a bank.
Mm-hmm. That's a payroll protection.
And that's confusing a lot of people because I'm getting tons of questions. My accountant said, the email will start off, please help, my accountant said. No disrespect to the accountants out there, but we're all learning about it in real time. So there's a lot of websites out there that are saying different things.
Just in review, would you just restate the ways a sole proprietor may be able to apply and get some money? They're standalone business, yeah, or LLC sole proprietor.
Yeah, so as a sole proprietor, they would be eligible for the economic injury disaster loan, and they would be eligible for the economic injury grant, which is a $10,000 grant. And the grants are going out within days, direct deposited, while the disaster loan takes maybe 2 to 3 weeks to process. And they're eligible for the grant whether or not they get turned down for the loan. So let's say they just didn't make their case well enough for the loan, but they applied for the grant. They would get the grant and they would not have to repay that. It would be theirs to keep. So it's almost like, the Wild West right now, as far as, the grant. So people are applying just for the grant to keep them up and running.
And where should they go first? Call their bank, go to the link. Where's your first step for them too?
So I would say go to the portal. Go to the SBA.gov portal first. And I will send a link also to Dan. So you guys can see my screen, right? Let me share my desktop here. See, where is it? Got so many things up there.
And what you want to make sure is you click share desktop
Okay.
versus just one screen, or we won't see it.
Okay. Yeah, I'll come back to it, but basically there's one link that takes you to, let me go to my saved.
And the link for the EIDL is right at the top of the SBA website.
And if you want us
Yeah.
to see what you're doing, we're only seeing the PowerPoint because you might
Yeah.
have just clicked that.
Yeah. Thank you, I appreciate that. Hold on one sec. Okay, so on the, like you said, the top page of the SBA, thanks for that. I was going to the disaster first, but you can get to this link right from the homepage. It's going to list all the programs that are available. So the Paycheck Protection Program, which we'll talk about in just a minute, that's going through lenders. The Economic Injury Disaster Loan in Advance that's coming from the SBA. U.S. debt relief, SBA debt relief that's coming from the SBA to current borrowers. And then the Express Bridge, which I'll mention in just a second. So those are the big 4 programs that are out right now to small businesses. All right, so let's see here. Go back.
And we have a few more questions I saw queued up. So guys, stand by, and gals, and anyone who has weak connection, you know, put something in text.
All right, so I'll go back to the PowerPoint real quick here. So this is the other piece that, you know, one of those links would take you to and talk about the Express Bridge, which is, so this has been around a long time. I would say it's been on the back burner. It's always been on the back burner. It's now still on the back burner. But if you have an existing banking relationship with an SBA lender, you could go to them and get a bridge loan for up to $25,000. So similar kind of to the NC Rapid Recovery Loan. So it's a bridge loan basically. And if you took it out, let's say you just had to have immediate cash, you know, on hand, you could take this out and then repay it with the Economic Injury Disaster Loan. So a lot of folks have done that in the past during times of hurricanes and things like that. But now that the grant is out there, which is a new thing, people are just going to the grant and the PPP program versus this kind of often unutilized loan program. It's not well utilized, but it's out there. So you may want to bring it up with your clients and just mention that they have to have an existing relationship and it has to be an SBA Express lender. Those are the 2 qualifications.
We had one more question I think we missed.
My question really related to defining a sole proprietor and whether or not they have to have a tax ID number. Do they need to be incorporated?
No, as a sole proprietor, they could just use their social security number. That's
Really?
the,
Okay.
yeah,
Okay.
yeah.
All right, thanks.
You're welcome. I'll go on a couple of slides and I'll stop again. So these 2, the Paycheck Protection Program and the Small Business Debt Relief, are the ones that were passed on Friday in the CARES Act. And SBA is writing all the rules right now for the PPP, and lending will start tomorrow. And that'll be through SBA 7A lenders. Those could be the big banks like the Wells Fargos of the world, it's First Citizens, which are regional banks. It could be local community banks like Southern Bank and Cornerstone. And it could be credit unions like Self-Help. And could be CDFIs as well if they do 7A lending. So almost all of the SBA lenders will be participating because it's 100% guaranteed by the SBA. Let me go to the next. I'm going to skip over this slide here. Okay. So this is the 349 billion program, and it wants to keep businesses, it wants to keep folks employed with the current employers and keep them on their payroll. And it also will pay some additional costs. So it'll help pay for mortgage interest, utilities, and lease payments. So if you're spending it on any of those 4 things, then that portion will be forgiven up to a certain amount. So they're saying 2 months. So let's say you have 2 months of payroll, utilities, and mortgage and interest. The SBA, if you take out the payroll protection loan, that 2 months of that amount for those expenses will be forgiven. And it kind of gets into the weeds a little bit, and like the one-sheeters I'm sending you will kind of explain more of it. The question has been asked, like, can you count, payroll taxes and withholdings and all that stuff as part of your expenses? And so we're saying, talk to your bank. I think banks are under the assumption that those expenses will be included in the forgiveness. So that would most likely be a bank specific question that in the rules that are coming out in the next 24 hours. The max is 10 million, and the loan payments will be deferred for up to 6 months as we know it today. It may be extended even further. So that will be something to be aware of. You guys have any, there's a lot of information on the slide, but I'm going to share it with Dan as well for the folks out there.
I just want to mention I am recording this to cloud, folks, so we can decide what we want to do with it. I'm going to assume it's a private link until Dan says more. I will take a moment to edit it for someone cleared their throat or something like that. And Patrick, what I'd like to do is run it by you. And then if you say, Martin, would you cut this out? I'll do it, because just in case, I think this is invaluable that I'd love for us to be able to share publicly, but I want to screen it through you. Okay.
Sure. No, sounds good. And so in this case, so the bullet points maybe they don't point out well enough, but there's no collateral requirements, and there's no personal guarantees, and there's no fee. So that takes a lot of the underwriting away from the loan. So we're expecting these to go out rather quickly because there's 100% SBA guarantee attached, no personal guarantee, and no collateral. That's half the underwriting right there. These should be going out rather quickly. And I think they're even stating within days, or I've heard some of the websites out there like same day loans, but I'm thinking days, not weeks, as they ramp up the program. So let me skip over to the next one real quick. So the debt relief piece is really nice to hear about. So if you have an existing SBA loan and a microloan, a 504, 7A, SBA is going to pay the principal and interest for the borrower for 6 months. So they've already given the banks notice that they should not be collecting any principal and interest from the borrowers starting March 27th. And if they've made a payment between March 27th and now, the banks are telling them to give the borrower an option to return that money are to apply it to their principal balance. So the banks are aware of this. The bank should not be charging current SBA borrowers with any principal and interest. We said retroactive to March 27th. So that's a good thing. And that's a big deal because there's like, hundreds of billions of dollars in loans out there being paid by small businesses that have current loans. I guess that's the one good thing you'd get from an SBA loan versus a private loan. You have to pay the debt on that right now. The next one you guys know about, this is something I showed to a lot of people, scores, providing mentoring, your websites, and then I'm ending with the disaster loan website to go to for any questions. So I'll pause there and then see if anybody has any last questions over those last two programs.
I do have some questions.
Hey, how's it going?
Good. This wasn't touched on in there, but I know on the PPP loans, there's something about if someone's compensated more than $100,000 a year, are you supposed to exclude that employee entirely, or do you just exclude what they make over and above 100,000?
Yeah. So if you were to pay them any salary above 100, that portion would not be forgivable.
Okay.
So you could still pay them, it just wouldn't be piece of the forgivable portion.
Okay, so you just assume for that they're making 100,000, and anything over that is out of your pocket.
Exactly.
Right. Okay.
Pretty much.
And I do see that the EIDL will cover owners of rental properties, but other than that, why would anybody go for an EIDL loan versus a PPP loan?
So I guess you could just compare the two. So the PPP, I think, is coming out. Let me switch screens here real quick. Let me stop sharing just for 1 second. I can switch over to the borrower. Actually, I just go to the SBA website. I think that has it right there. And I'll switch back over to the, I'll share my screen in just a second.
And we have another question after her, so.
Okay, so let me screen share this. Okay, so you should be seeing the details, loan details and forgiveness. Do you see that on your screen?
Yes.
Okay, so the disaster loan has a up to a 30-year term and is at 3.75% interest for for-profits. And the PPP, this loan has a maturity of 2 years and an interest rate of 0.5%. So, so you may want to just do kind of a quick back of the napkin calculation on what your debt payment would be on the portion that's not forgiven, and just do a calculation with the economic injury loan and see what your debt payment would be with that interest rate. You can take both, but I think now that this new payroll protection program is out there, I think you would not be able to pay payroll with the economic injury disaster loan, I think, or at least the grant. I don't know. Let's wait 24 hours to kind of get into the weeds on that, but you may want to compare those two.
So really, you look at the EIDL loan if you think you're going to have non-forgivable expenses. That because otherwise you'd always pick forgivable over non-forgivable, right?
Yeah. I mean, it would. I think you're right. You're right. You know, does your business have a lot of? I mean, most businesses' payroll is like a big chunk of their expenses, right? So,
Right.
but if you have a business where payroll is not, then maybe that would be a factor in one over the other.
Okay. And then my last question, and then I'll be quiet. On the PPP loan, maturity of 2 years and interest rate of 0.5%. Obviously, that's assuming that it have non-forgivable expenses, because typically then it would be forgiven and you wouldn't have payments, right?
Right. Right.
Okay. Okay, thank you.
Sure.
Patrick?
Yeah, Harvey has a question. Go ahead, Harvey.
Right. So I have a client who was thinking about the PPP loan, and he's got a restaurant, and that's the nature of that business. There's always a lot of turnover of people, and in order to qualify for the forgiveness, you have to have retained more or less the same number of people throughout the loan period. But
Right.
is that just numbers, or is it actual the same people?
I think it's numbers. So I've been asked that question before, and it was somebody said, I just have a lot of turnover because of performance.
Well, there's that, and there's just the nature of the business. Is, people come and go.
Sure. Yeah, I think it's I'll read through the fact sheet, but it is is it an average? Is it an average over
Well, it's a monthly test, I think.
a monthly test? But is it an average? I think, or is it an actual count? I don't know.
I think it was like a monthly average, but it's an actual number compared to your base.
Right. Yeah. So if as long as the intent is to have these people come back on payroll and pay them versus having them go. And for those low wage workers, because of the unemployment benefits have increased, what $500 to $600 per month.
Right.
So does that employee want to come back to work if they know that they can make more on unemployment versus going to work?
Well,
and
related to that is, if business is slower now than it was before because of the whole environment, well, suppose you don't need as many people as you had before.
Yeah. I mean,
you're going to fail the test to get the grant. Right.
Yeah, but I think, the intent is to, let's say, to be kind of like in a ready state for the economy to come back. So hire these people back, have them being able to pay their mortgage and their rent, and go,
Yes, it seems to say you've got to be paying more or less the same number of people, whether you need them or not.
Right, exactly, and that's
right.
the intent. That's the intent, because
I got it.
The intent is to, Harvey, you know what I'm talking about.
No, that's,
you may not have them. They may be idle.
Okay, I needed to ask because it's one of those things that you scratch your head about.
Yeah, under normal economic theory, that would not be the way to think about it. But under this kind of weird disaster situation, I think folks want people on the payroll versus versus unemployment.
I figured that would be the answer, but I promised my client I'd ask.
Sure.
All righty. Thank you.
Sure. All right. You guys, you're doing good. Everything else? Any other questions?
Yes.
Or
yes.
Okay.
Good question. So if I'm sitting with a client who's been in business for 2 or 3 years, what is the preparatory work that they should do before deciding which type of loan that they should go after?
That's like the $1 million question, or the whatever dollar question, $64,000 question. So maybe someone's gonna be smart enough to develop like a little calculator. But as of right now, they should just take a look at the payroll, see what's payroll protection program, see what can be forgiven, and kind of do that calculation. And then maybe, because the disaster loan period doesn't end until December 18th of this year. So maybe they take the payroll protection program now. That keeps them up and running for the next couple of months. And if need be, they can come back and apply for the economic injury disaster loan and use that for additional sources of funding.
Yeah. One of the things you said at the beginning, Patrick, was that, well, apply for both. Is that something that we should still consider doing, telling them to do?
I would say yes, because they don't have to take the economic injury disaster loan. It can be sitting on there in the SBA processing center as approved, undispersed, and they can hold on to that. And at least knowing that the SBA offered them, X amount of dollars, they know that that's there in case they need it. And the other good thing is economic injury disaster loan payments don't start until 2021. So let's say they took that loan, they could have that cash sitting on their balance sheet for practically the rest of the year with that principal and interest payments. So that might be an incentive to apply for both.
Okay, I just don't want them to be confused and say, and then they do nothing, as opposed to, if you're really not sure what you should do, try them both and then see what happens from there.
Just be accurate in your data, which is, of course, right?
Yeah, and I think over the next 24 hours, I kind of caught us right before the rules come out, but I'm gonna try to look for those rules to come out pretty soon in the next 24 hours and read through them and see if there's any stipulation saying if you take the PPP, you can't use the EIDL for something, but we haven't heard that in any of the bullet points. So right now I'm thinking take both. So I don't think that's gonna happen.
Patrick, should we, Dan and I, schedule another one of these early next week for your latest updates? I know you're real busy, but I just thinking ahead.
Yeah.
I want to thank all of y'all for showing up today. I made a list of everybody's name that attended. So Patrick, whenever you send me those links, I will just turn right around and send them out to everybody that he sat in today. Okay. And then Martin, I think you and I probably offline will talk about where we could put this recording, because I think if you do that, that shows all of Patrick's presentation right there. So that'll be very, very helpful and useful to everybody. In addition to the special links he's going to send me. So Patrick, send me those links at your earliest convenience, and I'll take the 23 folks that sat in here and forward them back over to them. If anyone else has any of those suggestions, ideas, or comments, I think this is really good, and it was good because there's a lot of information here. And Patrick, I think you did a superb job of getting it disseminated to us. But just like any other program, I know it's still constantly evolving here. So that's why I'm thinking if we could possibly next week, you and Martin and I'll sit down. We can try to sync our schedules in so we can do it again, maybe midweek or something. But we'll yield to you, Patrick, because we'll yield to your schedule.
Sure, sounds good.
Thank you very much.
Thanks, everybody.
Thank you.
Patrick, thank you. We appreciate this very much.
Yeah, thank you, Patrick. Those outstanding.
Thank you, Patrick.
Great to see everyone.
And we'll let you know when we get the next one set up. We'll send out another cover
Keep
letter.
up the great work, gentlemen, ladies.
Yep.